Hey everybody, thank you all for being here, and thank you Mr. Pancake Panda. What a cool name. We are live. I hope we have audio. I'm just gonna roll on. So I used to do these on a Sunday, but the last couple of weekends I had some other stuff to attend to. So we're kind of moving to Monday, and it's holiday season and everything's kind of weird, but I will be here every day. So these are the top 10 questions for the week. None of this is financial advice, it's edutainment. And all the questions come from Patreon. I just realized I've done 2,500 posts for the Patreon community in 18 months. That's about 130 posts a month, and that's over 4 days. And some of the stuff is very timely and very good. And I want to thank the community for all the great questions. They are getting better and more aligned every week, which is really cool. So the very first question of today is from Hard Money. Given diminishing returns or cycle, what level of return might we look forward to in the next cycle once Bitcoin bottoms? So good question. Again, black swan after black swan. Looking at the market today, SI is very weak, which could be related to another shoe that could drop. But I don't think we'll see anything as big as the FTX blew up. That's a $10 billion hit. Not that it really impacted Bitcoin, but I don't think we're going to see something quite that bad. So let's look at a slide I put together a little while ago. This is kind of based on my Bitcoin fifths theory. And here, I think next cycle, conservatively, we could get to 81,858, which is pretty good. And going forward to the fifth halving 2028, 424, sixth halving 2032 is 863. It's very funny because the very first price prediction model I did for Bitcoin was back in the year 2017, 2018, and I had forecasted $113,000 Bitcoin price by 2030. Back then, Bitcoin was a lot cheaper, but it goes up. And the reason I think it goes up and the reason it could stay flat is the following. It's basically based on activity and Metcalfe's law. So today, you can see the Bitcoin active wallets are 960,000 active wallets on the Bitcoin blockchain. It's down from a high of about 1.25 million, which I think hit around a couple of years ago. MT, thank you. And yes, I'll cover your paper Bitcoin. But let's fast forward these users to Metcalfe's law, because the value of the asset is a function of the usage and the number of participants on the network. That's why I'm very intrigued by layer ones, and I'll talk more about them in a second. But this is my Metcalfe's conservative price prediction model. And it's good to see a lot of people out there like Mark Yusko and others talking about Metcalfe's law. But the key takeaway from here is if Metcalfe's law holds, which it does for all other industries, the conservative model has Bitcoin reaching, wait for it, it sounds a bit crazy, 3.4 million by the year 2030. But that assumes the increase in usage follows the trend that we've had since the beginning of time over the past 11, 12 years. Now, that also assumes over 1 billion users, active users on the actual chain. Now, cutting that in half from 1 billion users down to 500 million, this would get us to $1.5 million Bitcoin price. But remember, one of the fascinating things that's always fascinated me about Bitcoin is the scarcity. And we'll talk more about scarcity in a minute too, about how much is left on exchanges. It hit a new all-time low. But adoption is the key, and the adoption needs to go up 500x from today for that price to be achieved. Therefore, I'm sticking with a much more conservative price of $80,000, $81,000 for the next cycle. That would be sometime in the year 2024. I do believe we could hit about 61, 62K by April 2024. And that is right at the halving, April, May 2024. After that, a bit of a run. But then people are much smarter now. They get smarter every year. They anticipate the halving. So that could be front run as well as we go forward. But can you imagine for a second, this is Bitcoin getting to 1 billion users. What if a layer one blockchain could get to 1 billion users? What would that be worth? Same deal. Market cap is the same. It's all about the network and usage. And so we'll watch this carefully. So next question is from Bitcoin Plankton, cool name. Is it possible another hard wallet could generate my same seed phrase by accident? If that happened, would it matter if I have a multi-sig solution? Do we need more advanced security beyond the ledger, etc.? Great question. And again, always question your OPSEC as you go forward. But I'll be able to give you some good comfort. And what the question from Bitcoin Plankton here is, can the ledger or some wallet generate the same Bitcoin seed phrase as yours? So let's look at the math of this real quick. The essence of it all is SHA-256. And that means there is a 1 in 2 to the power of 256 chance of that happening. Now, it does not sound like a big number, 2 to the power of 256. But remember when Jeff Booth was on the channel and he talked about folding a napkin? That is the key here. The number is so massive, it would take millions of years before we get to a collision, i.e. two wallets generating the same seed phrase. And while the probability is not zero, it would take an awful long time. And it's nothing for you to worry about. The odds of it happening to you are as zero can be. Let's look at this number for a second and how to pronounce 2 to the 256. Well, in decimal, I wrote out the decimal number there. You can see it's 115 and hundreds of numbers. Or it's 1.158 by 10 to the power of 77. That is 1.1 with 77 zeros after it. And in other strange language, this sounds like an Audi vehicle. It's 115 quattorvingitillion. I hope I said that right. If there's any Italians in the audience, please correct me. That would be great. But that's a big number, so nothing to worry about. Next question is from Imre Lut. Can you investigate this comment tweet? And this is from somebody on Twitter called Nakos. Solana lost 97% of its developers from 2,453 in January. There are now 75 left. The total number of active mainstream blockchain developers dropped from 3,700 to 1,600. Big yikes for Sol. So all the time, I spend probably 60 to 80% of my life on Patreon, dispelling FUD and keeping people calm. But there's no shortage of people throwing mud out there in the cryptoverse all over the place because temperatures are very high, people are very anxious, and the market, quite frankly, is very boring. Stock market is getting smashed, crypto's getting smashed. Thanks, JP, for smashing everything. But Anatoly did respond to this tweet, and the typical short, logical answer: how do you look at this graph and not realize that something is busted with the data? Did Solana have 3 times the total number of developers of all other chains combined at the start of the year? Or maybe the token list repo got deprecated. Aha. So then Token Terminal jumps in and he says, removing the Solana Labs token list repo from that data, now we'll share an updated chart. Solana did not, in fact, lose 97% of its active core developers overnight. So it's not correct. Again, there can be problems in how people pull data by not correcting them carefully. And then Masari also coincidentally jumped in with their devs on Solana post. And Masari asked the question, during the FTX collapse, did that force Solana devs out of the ecosystem? And examining the developer stats and the number of GitHub developer repos and the number of daily unique programs, they're both up 3x year over year, despite Solana price dropping 95% over the same period. It's been a brutal time. And yes, Solana got a black eye from this. But if you look at this carefully, you'll see August 2021, 2,400 developer repos, December 21, 7,151, and November 2022, 20,717, basically a 3x in 12 months. When you look at the dApps, daily unique programs, went from 120 in August 2021 to 390 this time last year, to over 1,100 today. Again, fundamentally a 3x. So it's interesting to see the linear relationship, the 3x to 3x of devs to dApps, which is good. I never knew that before I put this together for you. So, and big thank you to the team at Masari, and thank you for the great question. Next question is, what do you think of GMX as an alternative to centralized exchanges from DFS? Interesting question. So I have not, in full disclosure, used GMX yet, but I will this week, and I'll let you know how it goes. So far, there's a couple of cool things about it. One, it is a decentralized spot and perp exchange that supports low swap fees and zero price impact trades. That's helping it come out of obscurity to smashing the competition. GMX token holders also receive about 30% of all trading fees, which is a very good portion. And the GMX outperformance could have stemmed from its token holders receiving this portion, because people like rewards, and sometimes rewards drive actions and behaviors. But the inflation on the token is running around 13%. So for a relatively new token, it's not too bad, but it still is pretty high. Higher than we like. My cutoff is around about 12 for high growth names, but this is a high growth name, so you can absorb more inflation. Let's look at GMX versus Uniswap. This is interesting. You can see here, this is from Delphi Digital. GMX has flipped Uniswap in daily fees for the first time. Notably, GMX earned about $1.15 million in daily trading fees on the 28th of November, last time we had this measurement, which surpassed Uniswap's 1.06 million in trading fees on the same day. Yes, this is a point in time, but this is a trend, whereas, again, it's come out of obscurity and has gone after the 800-pound gorilla in the space, Uniswap. Let's look at some other data on this. You can see here, Dexes are definitely winning market share with the fallout from FTX and complete lack of trust with all centralized exchanges in the wake of this huge black swan event. But here, the decentralized exchange revenue rose by 107% to 5 million in November, boosted by a 128% increase in annualized trading volume and a 31% rise in daily active users. That is very, very big in a month. In comparison, Uniswap's annualized revenue increased by about 75%. And daily active users by 8%. So it's kind of, Uniswap is falling behind GMX, and the GMX growth is very, very vertical. So with that, I'm not going to do a deep dive. I might do a should I buy? Let me know if you're interested. I know last time I did one, I did it because the community wanted it. It was on Rune, but nobody wants to hear about altcoins in this market. So, but I do what you guys want. So let me know. As we go forward, let's go to the next question from Scranny Wench. Do you have any cash park stocks you use, and which stocks would be best for this? Quite frankly, I have been buying the dip all the way down for Tesla. And the reason is simple. I scour the earth for low risk, high reward names. And despite the absolute weakness, Tesla down 150. Why? Well, I looked down back at the couch to find any pennies I can put into it for these exact reasons. One, the Tesla math. And this is just either I am insane, or there's something missing, or the board is lying, or whatever. But conservatively, I do believe Tesla can make 20 million cars by the year 2030. All right. They are on track to do about 1.4 million plus or minus a couple 100,000 in 2022. And 2.3 million in 2023. And actually, data is just out that Giga Berlin is ramping faster than Texas. Okay, they're doing 3,000 cars a week right now, and the ramp is extraordinary. They just hit the 2,000 a week milestone a few weeks ago. So again, they're really ramping up fast, and it's no doubt that Giga Shanghai will be doing, way north of 1 million cars next year. So if you imagine the average car, the average selling price, ASP, of those 20 million cars in 2030 is 50,000. Remember, the dollar value will go down, so a dollar won't go as far. So assuming just a $50,000 price per vehicle is $1 trillion in revenue. Now remember, no car company can match them on effectiveness and efficiency. Their operating margins and profit will be about 30% or a lot higher. If you weave in, like even that, when you put all the numbers together, like the incentives now in the US to get a Tesla $7,500, that goes straight to the bottom line of Tesla. And they're already making 30% of the car. I mean, the numbers just get mind-blowing real fast. And imagine they're getting $7,500 incentives, and they charge $15,000 for FSD. It's more pure margin. What is that? $22,500 on a $50,000 car with 30% margin? I mean, this is why I did a slide a couple of weeks ago about how the net present value of the future cash flows can go to infinity real fast because the numbers are mind-boggling. Not shilling, just data on this channel. Here, again, assuming that operating profit, 30%, takes the $300 billion in profit on $1 trillion in revenue. And the market cap in 2030, assuming a very, very conservative PE ratio of 30, excluding their energy business, their insurance business, their FSD business, the Optimus robot business, the semi-truck business, all that stuff, the share price will go to $2,000. That's a 13.33x from where we are today at $150. That's where I would take the risk and park rather than hold fiat. So very much enjoy your question. Hope that you like the answer. Next one is from Sergeant Pepper. Any thoughts on what I should do, if anything, with my January 2024 Google leaps that is deep out of the money? That's OTM. So first of all, I don't know what price you are at in terms of strike, but let's look at the Google chart for a second. Remember, March 2020, we hit $50. I actually got into some synthetic longs at that price, very risky trade, but I did a lot of them and did the same thing on other names. But again, we are now down at $89.22, which is crazy. We rode it all the way up to $150. And if you look here at this chart, you'll see the it should be Google, not good. Google is at the fib retracement of 0.618 level, which is kind of interesting that it's flat on that level. I don't know if it's meaningful or not, and many people believe so. But maybe that will act as support at $90. And my conservative target, let me explain why, is about $129 for next year. But if markets really go risk on and these things start commanding the PE ratio that they need, it could go a lot higher, easily back to 150. Let me explain my fundamentals behind Google. So all of their business is growing despite the recession. Cost cutting is going to hit hard in 2023. They've already slammed on the brakes in hiring, and they're going to be pushing some people out, I reckon. Of the analysts, 48 analysts that follow Google, 44 say buy the stock, 0 say sell, and 4 say hold. My EPS estimate is about $6.30 a share in 2024. The current PE is about 17.8, and the PE ratio, based on calendar year 2024 numbers, again, sandbag numbers, would be 14. So therefore, my year-end target 2023 is 129. If your strike is for January 2024 and it's close to that 129, I say sell it, book the loss, and re-enter at a lower strike as you go forward. This is a season to clean out stuff, recognize losses, although it's been a year where everybody is pretty much losing. So there'll be a lot of stuff, and therefore we need really good trading tools to take advantage of. Been able to trade freely next year and not be afraid of incurring short-term capital gains, which is part of my pickle and the big learning from 2021 for me. Next question. According to this tweet, there are 29 million Bitcoin for sale on exchanges. Assuming this is wrapped Bitcoin, REN, derivatives, etc., is it possible to figure out how much fake Bitcoin is for sale? And why hasn't the price of real Bitcoin jumped as a result? So this is from Dr. CW. You guys can read it yourself. And he says across 45 exchanges, there are 29 million Bitcoin for sale. Alrighty. So I'm not going to get political here, but always check the source and understand the motivation of why a certain person is saying something. Then you can start digging into the data. Let's look at all of the exchanges and all of the Bitcoin on those exchanges. All the top ones here, from FTX that has about 14 Bitcoin on it right now, to Binance and Coinbase. They are the two 800-pound gorillas with nearly 500,000 Bitcoin each. The total amount of exchanges today is 1.8 million Bitcoin, which is down from the 2.35 million Bitcoin that was there not too long ago. So everybody's been withdrawing their Bitcoin onto self-custody. Now, there's a second question related to this, and I always say pure form, every asset, always. No derivatives unless you're in for a very short-term trade. Okay, always said that from the very beginning of this channel. Pure form, you can hold your own keys, you can verify it on the blockchain, very simple. And for CW to come out and say, oh, it's 20 million, yeah, there might be some shady wrapped vehicle somewhere where there's double counting or rehypothecation? Of course, that always happens. But this next question actually dovetails into this first question. This is from Captain Eddie. You said that there is 6x the amount of paper gold in circulation to the real amount of gold. As a result, the price of gold is suppressed, plus many other price fixing by banks, etc. Can the same happen to Bitcoin, and how much of that is affecting price? So great question. Let's look. First of all, it's not 6x, it's about 100x, which is staggering when you think about it. The paper gold market is 100x the amount of the physical bullion, and there has been an unregulated expansion of the unallocated gold derivatives led to artificially suppressed prices, and gold has been in this kind of 20-year bear market, believe it or not. I'll show you some data around that too. But I think gold fell to around $250 in the year 2000, and even with the price moving to 1,700 today, the gold price is not fully accounting for the unprecedented levels of paper money printing that has occurred, record inflation, 2008 global recession, coronavirus panic, and risk off views from investors. Gold should have flourished in this environment. I've said it 100 times, but it barely budged. I said, the most perfect macroeconomic backdrop gold has probably ever had in 50 years is there today, and nobody's getting it. So the question is, yes, gold derivatives do suppress price, and if every paper owner tried to convert, there would be no gold because the amount of physical compared to the paper, if everybody with the paper tried to trade in their chips and get gold bars out, there'd be nothing. Talk about a run on the bank. And yes, the same thing can happen with Bitcoin. But remember, the beauty of Bitcoin is you can audit what you have. You can audit your coins. And that's why I always get the pure form. Don't mess with paper unless it's a short-term trade. Now, getting back to one of the things I did mention regarding the money printing, I put this chart together. This basically is gold divided by the M2 money supply over time. In fact, it's over the last 19,000 days, everybody. That's 50 years approximately. And granted, gold value is keeping up with money supply growth, but it's not returning anything. So is it an inflation hedge? Yeah. But are you making any alpha? No. Now, I know when I say that type of stuff, people get upset, but this is what this chart says. Not me, blame TradingView. Divide gold divided by the M2 money supply, and that is what it looks like. Now, there was some great money to be had back in, 1979? Look at that spike. Huge money. But other than that, it has been beep flat. So be careful. And yes, I do believe paper gold. And same thing with people. If they're not buying Bitcoin, if they're buying derivatives of Bitcoin, or perps or whatever else, they're not actually buying the Bitcoin, and perhaps nothing backs it like in the gold world. So hope that answers your question. J-Dog, what do you expect will happen to mortgage rates when the money printers inevitably go burr again? For those of us who didn't manage to take out loans at the end of last year at cheap prices, will we ever see such rates again? Yes, we will. And I was pounding the fist on refinancing your real estate last year. It was incredible. There was a 30-year fix was going at about 2.75%. Now, within a year, it hit 7.2%, which is kind of insane. But the good news is the money printer will go burr. We're living in a house of debt. In fact, President Biden recently bailed out a pension fund to the tune of 20-30 billion. So that's a foregone conclusion. They're raising the debt limit. Money printing has to happen. And in fact, the Fed is on target to pay about 1.2 trillion in debt servicing costs because they increased the interest rates on themselves. So here we go. Now let's talk about exactly what will happen. So when there is more money supply, it lowers market interest rates and therefore mortgage rates will fall. And conversely, tighter money supplies raises interest rates and it makes it more expensive for consumers to take out a loan. And that's why the government is the biggest buyer of MBS, mortgage-backed securities, because they need to flood the market with liquidity to stop the real estate market from tanking. Real estate in the United States makes up about 30% of GDP, and it is crashing hard. we ain't seen nothing yet. But the important thing for you to look for is this. This is the spread. I like to look at this chart, the spread of the 30-year mortgage and the 10-year Treasury. And here, the spread traditionally, when I calculated it, was about 1.7% higher than the 10-year Treasury, i.e. the 30-year mortgage is typically about 1.7% or 170 basis points higher than the 10-year Treasury yield. Now, put another way, the spread between the two average is 1.7%. So if you have the Fed funds rate at 3%, mortgage rate should be 4.7%. Now, if you look at this chart too, you can zoom in and you saw that mortgage rate of 7.2%. And the Fed funds rate was, or the 10-year was only 4%. That's a 3.2% spread. So that is a huge margin. And that means the banks and institutions have wiggle room to bring that down in line. So they shouldn't have that high an actual spread. Now there's a lot of talk of maybe the Fed funds rate getting above 5%. Can't see that happening at all. Bond market doesn't believe it either. And if you just look at the current 10 years today, that'll give you a good insight as to where things are going. Also, the short-term rates, like the 2 years, a lot higher, hence the big inversion, hence the big problem. But that's where we are. We will get back down. It'll be a while before we get back to zero interest rates, which means the sub 3% 30-year fixed mortgage. But I do believe over the next 3 to 5 years it'll happen. Again, because of a financial crisis or a need to stimulate the economy or some huge spike in unemployment or some problems with human productivity. One of those things will trigger the Fed to print again and reduce rates. Many people are calling for it actually to happen in the first half or even the first quarter of next year. So let's talk about the final question from Horse Happiness. I want to extract my FTX order history for tax management purposes, but I'm nervous to log back into FTX Pro app since the exchange was hacked. What would you do? So, very sorry you did not get everything off. I gave, I missed the Celsius thing, but I did warn multiple times people about FTX within Patreon. But here, this is from Fortune magazine, and I know CoinDesk has written about this too, but basically the world was shaken by the biggest black swan event in Bitcoin's crypto's 13-year history. FTX is insolvent and all funds on the exchange are frozen. Now, regarding this, I'm not sure if the whole virus thing was a fake thing to keep people away from the website. But as of right now, user funds are frozen and FTX has halted withdrawals. So FTX users are stuck. And unfortunately, that means from a tax perspective, there's nothing you can do yet. But because the reason for that is they believe there's still a chance for your funds to be recovered. And you cannot deduct any losses in this situation. And therefore, you're not required to report any gains or write off any losses at this stage. And that's my understanding. But please, depending on your jurisdiction, talk to your tax accountant. Maybe you have tax laws that are different, but that is, I think, the standard in the United States right now. And favorite part of the show, we're helping animals. Thank you all for donations and stickers. Today, we donated to primarily primates. This is Lenny. Lenny was kept as a pet his whole life, but now he's in a sanctuary where he loves running along the side of his habitat, and he loves basketballs and his giant caterpillar. So thank you everybody for that one. Let's jump into some live Q&A. Also, my favorite part, to answer your questions live. And a big thank you to everybody in the chat and the moderators for doing all the great work you do. So MT, thanks for covering paper Bitcoin. Will we always be manipulated? Or is Gensler just getting his rich buddies in at cheap prices before spot approval? I'm not too sure what Gensler is up to, but his association with SBF was very, very, very suspect. Also, the relationship between his former boss at MIT, who is the father of Caroline Ellison, who probably rolled over and ratted at it. It is beyond incestuous. So something is strange. I don't know what Gary Gensler is up to. These days we have to question everything. We have to think about every angle. And it wouldn't surprise me if this is all part of some major crypto suppression type activity. I'm not sure. Who knows? Maybe Gary is just was suspicious of the type of stuff that DCG was doing with Grayscale, which is also very fair, selling the asset at a premium and now at a huge discount because of that arb play. I don't know. Maybe he's protecting investors. Maybe he's not. I can't tell at this stage, but we will find out over time. So thank you for that question. Red Hat, you think the market has room to keep going down? If so, ever thought about shorting? Schöne Grüße aus Berlin. Yeah, I like to short equities. I don't play with leverage with crypto because it's so unknown and so difficult to figure out. Like with equities, you can spot tops and bottoms kind of a little bit easier unless something really crazy happens, like Elon goes nuts on Twitter and that destroys sentiment. But yes, I put it this way, zoom out. We had the worst black swan in that 13 years as voted by many people. I know people say, oh, it's not a black swan. It's like we're having them all the time, therefore it's not a black swan. But really, it was the biggest black eye for the crypto space. And Bitcoin went from that 21,000 down to 15.5. And now it's bouncing around, last time I checked, 16.6. So it's up off the lows, but hasn't been very, very impressive. In fact, it's very tedious. Volumes are so low. Could we go down further? I think even if something were to blow up, like DCG was forced to sell all their GBTC, all these TCs, GCs, etc. If that were to happen, that would bring a lot of Bitcoin to the market. 600,000 Bitcoin GBTC holes. I don't think it'll come to that. If it did, I do believe the market would be able to absorb it. Bitcoin could flash down to 10K. And not all the people, and trust me, I've got people texting me all the time that, over the last 5 years missed Bitcoin and sat in the sidelines waiting. And they're texting me all the time. It's like, should I buy now? Should I buy now? Will it go lower? Well, what about 10K? Is that going to happen? So there's a lot of people waiting. So I do think it could be snapped up pretty big. And I also believe 2023, after a horrific year, it's very, very rare or even unprecedented where you get two horrific years back to back. So next year will be choppy, but it will be nothing like this year. So I don't think I always say as well, Red Hat, don't jump in front of a freight train because certain assets can move real fast and you don't want to be caught on the short side. Same thing as well, leverage long if they go down too. So I prefer keeping my option derivative action for equities. Bruno Bones, what is everyone's guess as to when the first crypto regulations come into play? Well, good question. We know governments run at the speed of government, which means it could take a long time. I think they'll probably go with stablecoins first. That'll be done sometime in 2023. But for them to figure out what to do with layer ones, etc., it'll take them a long time to categorize them and enforce laws, etc. But if they do drop the hammer, a lot of people always have this question as well, what will happen to these cryptos? They'll just go offshore. Not everything has to be in the US. And people now know how to trade in a decentralized manner. So you can't put the toothpaste back in the tube, as I say. Mr. Keyframes, any news on Genesis? Are they going Chapter 11 or will they save GBTC? I think they have a couple of $1 billion in the hole. Last I checked. Or not Genesis. Yeah, Genesis, not Gemini. Genesis, yes, they do have that hole. How big it is, I can't remember exactly. But it will bring down the whole family, Genesis Trading, DCG, maybe Silvergate will be involved. I need to relook at that. Last time I dug into all of this interrelationship, I did a video on it. And that was Thanksgiving Day, which was like the third Thursday or something in November. So it's nearly a month ago. I'll have another look again and find out. But I do believe there are bigger players that are looking at GBTC. I mean, it's a cash machine. If you can buy that for pennies in the dollar, there's no doubt in my mind a consortium like a Fidelity or a BlackRock wouldn't swoop in. They've got much better relationships with Gary Gensler and the SEC. They'd be able to get an ETF approved next year. So that's my thinking. I know that Michael Sonnenschein was on TV this morning. I didn't see him, but I heard he was on there. We'll find out what he says. So with that, everybody, I want to thank you for your super sticker, Jeff Hammer, Kiwi Robin, AC1, John Gula, Pancake Panda, Dogwan, and KN. Appreciate you all. Yeah, the markets suck. Yeah, it looks like we've got a few days left to have our Santa rally, as they call it. I did have a plan to hedge the S&P 500 at exactly 4,100. It hit it and fell down so fast, didn't have a chance to catch it. So I was like, ugh. Lessons learned, everybody. These markets move fast. Let's just hang tight and see what happens. But overall, I do believe the future is bright, and I'm very excited to see Q4 earnings for Tesla as well, and to see some movement coming back to the crypto space, because development is happening and usage is happening. Just look at the GMX data I showed earlier too, and the development activity on places like Solana. So with that, thank you everybody for being here. Love you all. See you all tomorrow, Octa, which is the TA Tuesday.